Hi everyone, welcome back to the channel Financial Radio. In this video, we will discuss about the important updates we have today in the live market. ZEE Industries lost 30% of its share value today. So we will discuss the reasons in this video. We also have an interesting update regarding Cipla and its shares. So Cipla shares gave an all-time high record and we will discuss the reasons behind that. And we will also discuss about Medi Assist Healthcare Services IPO. So before going to that, let's check Nifty 50 and Bank Nifty closings. So Nifty opened a gap up opening in the morning and after that a small consolidation at the high has been seen. But after that a continuous red candles has been made. So Nifty today opened nearly around 21,736 level and after that Nifty closed at around 21,243 in the evening. So from the top level Nifty rallied downside today heavily. We can see only bearish momentum in Nifty. We can see big red candles and very small green candles in Nifty. So it can be a downside or selling move in the market. The market may turn upside down. So when coming to Bank Nifty has been similar to Nifty today. So it gave a closing around 45,000 level. So initially after opening a gap up opening, the initial first red candle triggered the selling move and after that the sellingness continued until the day end. The bearish momentum didn't stop at anywhere. At nearby around 45,545 level, Bank Nifty made a halt, but that halt didn't hold the market. Today we have an exciting news from the financial world regarding ZEE Entertainment Enterprises Limited, commonly known as ZEE. It is facing a significant setback in the stock market. The company shares have plunged by a staggering 30% following the termination of its much anticipated $10 billion deal with Japanese entertainment giant Sony Corp. This abrupt development has sent shockwaves through the market, leading to a rapid decline in ZEE's stock value. Analysts are predicting further downward pressure, pushing the stock to its lowest level since 2020 August. At the opening bell, ZEE started up with a gap down at 208.60 rupees, marking a 10% decrease. The situation worsened as the Bombay Stock Exchange adjusted the dynamic price band for ZEE, starting at 15% and later escalating to 25% and 30%. As of 1:20 pm, ZEE is trading at 165.30 rupees on BSE, down by 28.67% from the last close. On NSE, the stock is 165.60 rupees, reflecting a 28.44% decrease from the previous session's close, that is 231.40 rupees. The trading volume has surged significantly, with 84.42 lakh shares changing hands at 1:30 pm. This is a stark contrast to the last 2 weeks of 23.08 lakh shares. ZEE has hit a new 52-week low at 162.25 rupees, the lowest since August 14, 2020. Investors are feeling that the impact as the slide erodes ZEE's market capitalization to 15,867.78 crore rupees. Over the past week alone, ZEE shares have fallen by 31.81% and over the past month, the decline is even steeper at 36.42%. Analysts are reacting swiftly to the situation with multiple downgrades for ZEE stock. CLSA has downgraded the stock recommendation from buy to sell, anticipating a decline to pre-merger valuation levels. Era Capital and Citi has also downgraded, citing the collapse of the Sony deal as a key driver. The collapse of the $10 billion deal with Sony is the primary reason for the downgrade. CLSA predicts ZEE's valuation to decline to 12x PE levels pre-merger. Elara Capital notes that the significance of the merger as a valuation driver in the past 2 years. Legal implications are also in play, as ZEE is considering legal options following Sony's termination of the deal. Sony has demanded a termination fee of $90 million for the alleged breaches and has invoked arbitration against ZEE. ZEE, however, denies breach assertions and highlights the willingness of CEO Punit Goenka to step down from the merger. In conclusion, ZEE is facing a significant downturn in its stock value and with analysts predicting a continued decline. The aftermath includes legal battles and potential exclusive reshuffling. Today we have another interesting update from Cipla. Cipla shares hitting an all-time high of 1408 rupees and a market capitalization of 1.12 lakh crore. In Q3 of financial year 24, Cipla reported impressive financials. with a 32.25 year-on-year increase in its consolidated net profit, that is 1068.4 crore. Revenue from operations grew by 13.66%, that is 6,603 crore rupees, and the EBITDA rose by a 24%, that is 1748 crore, with a margin of 26.46%. This robust performance led to a 7% surge in Cipla's share price, opening at 1395.95 rupees and reaching a peak of 1408.55 rupees. The stock has shown a remarkable 65% increase from its 52-week low of 852 on March 22, 2023. Cipla's India business saw a 12% year-on-year growth revenue, driven by strong performances in branded prescription, trade generics, and consumer health. In the global market, North America achieved its highest ever revenue at $230 million, a growth of 18% year-on-year. South Africa also demonstrated growth, with a solid 15% year-on-year increase in revenue. During Q3 of financial year 24, Cipla invested 400 crores, equivalent to 6.1% sales, in research and development, reflecting a 10% year-on-year increase. The company's balance sheet remains robust with a net cash position of 7,143 crore rupees as of December 2023. Debt declined to 449 crore rupees from 961 crore rupees in Q2 of financial year 24 and 803 crore at the end of March 2023. In conclusion, Cipla's strong Q3 performance has resonated well with investors, leading to a surge in share price and market capitalization. As always, it's important to conduct thorough research and consider consulting certified experts before making any investment decisions. Today we have an exciting news from the stock market as we discuss the recent debut of Medi Assist Healthcare Services on the stock exchange. Before we dive in, don't forget to hit the like button, subscribe to our channel and ring the bell for the latest updates. Now, we have a good day for investors. This is the latest update from Medi Assist Healthcare Services, a prominent health tech and insurance tech company. So grab your notepads and break down the details. Medi Assist Healthcare Services recently made a strong debut on stock market with shares opening at a remarkable 11% premium over the IPO price, marking an impressive start to their journey on the BSE and NSE. As the market opened, Medi Assist shares on the BSE started trading at 465 rupees, reflecting 11.24% increase from the issue price of 418 rupees per share. Meanwhile, on the NSE, the shares listed 10% higher at 460 rupees a piece. Post-listing, the share surged as much as 23.9%, reaching a high of 518.5 rupees on the NSE and 506.6 rupees on the BSE. As the time reporting, the market capitalization of Medi Assist Healthcare Services stood at an impressive 3,253 crore rupees, indicating a positive response from investors. Leading up to the IPO, the company was recommending a grey market premium of 34 rupees over the issue price. The GMP has fluctuated, reaching 80 rupees on January 10th and dropping to 27 rupees on January 17th. This dynamic momentum in the grey market added an element of anticipation in the stock's debut. As with any investment, caution is advised. According to Shivani Naiti, head of wealth at Swastik Investment Limited, investors might consider booking their listing gains and exiting their holdings. However, for those who chose to hold positions, Naiti suggests setting a stop loss at the issue price. While Medi Assist Healthcare Services is a well-established health tech and insurance tech company, concerns about client concentration and dependence on subsidiaries still require ongoing monitoring according to Nayati. The company successfully raised 1171.6 crore rupees through its public offer, which was open for subscription from January 15th to January 17th. The IPO was entirely an offer for sale of 2.8 crore shares by existing shareholders at a price band of 397 to 418 rupees per share. The subscription numbers were impressive, with the IPO being oversubscribed 16.25 times. The retail investors' portion was oversubscribed by 3.19 times, while qualified institutional buyers showed significant interest with an oversubscription of 40.14 times. Non-institutional investors also participated actively, oversubscribing their portion by 14.85 times. Prior to the IPO, Medi Assist raised 351.5 crore rupees through its anchor book issue, with participation from renowned investors such as Nomura Trust, Goldman Sachs, Ashoka Whitelock, PineBridge Global Funds, True Capital, and HSBC. Incorporated in June 2002 and headquartered in Bangalore, Medi Assist Healthcare Services offers medical insurance and cashless hospitalization through an extensive network of healthcare service providers. The company plays a crucial role as a mediator between insurance companies, healthcare providers, and the government. That's all we have for today. If you really like this video helpful at any point of time, don't forget to subscribe to the channel and also like this video. Thanks for watching.